Good afternoon, everyone. I am CA Bishan Shah, and along with me, CA Shikha Agrawal, we are the moderator of today's webinar. We are delighted to welcome you all in this webinar being organized by Continuing Professional Education Committee of ICAI. It is my pleasure to be a moderator for the webinar on taxability of plotted development rights, and the second session will be moderated by CA Shikha Agrawal on significant RERA case laws. In a short while, we will start this webinar. I would like to appraise you about the CPE committee. The accounting profession is undergoing a transformation worldwide. With the changes in the global arena, the role of the chartered accountants has gained more significance over the years. Today, business and society cannot visualize itself without the profession of chartered accountancy to ensure our members to maintain high ethical standards in providing professional services. The Continuing Professional Education CPE Committee of ICAI is undertaking relentless efforts to impart and equip its members with the relevant technical knowledge in the form of conferences, seminars, lectures, workshops, webcasts to hone their professional skills. We are pleased to inform that ICAI is organizing its first ever Global Professional Accountants Convention, that is GlobePAC, on the theme Connecting the Globe, Creating Value, from November 24th to November 26, 2023 at Mahatma Mandir Convention Center, Gandhinagar, Gujarat, India. GlobePAC is being celebrated as a mega event to display the important role that the accountancy profession has been playing in building stronger and more stable economies around the globe. It would provide an opportunity to the global market to network with the best financial and accounting talent in the India. Now I request CA Shikha Agrawal ma'am to play a theme video of a GlobePAC.
It gives me immense pleasure to announce that the Institute of Chartered Accountants of India has decided to organize its first ever Global Professional Accountants Convention, GlobePAC, on the theme Connecting the Globe, Creating Value, on November 24th to 26th, 2023 at the Mahatma Mandir, Gandhinagar in India. GlobePAC is being celebrated as a mega event to showcase the important role that the accountancy profession has been playing in the economic and social development of our country.
Globalization has made the world one village, and the services of chartered accountant are also available globally without any boundaries. The Institute of Chartered Accountants of India is also devoting significant efforts towards global networking. The convention shall be attended by more than 3,000 delegates from around 40 countries. I would like to extend a warm welcome to the fraternity on behalf of ICAI to attend and participate in the first ever GlobePAC.
ICAI is geared up to welcome delegates from across the globe at the GlobePAC.
Thank you, Shikha ma'am.
Thank you.
And now let us take it forward. We have a learned faculty, CA Rahul Patel, who is going to deliver his knowledge, share his experience with us on the topic of taxability of developed plots. Sir, as GST is also evolving and this issue is also required to be evolved, and knowledge on the topic is very much required by all amongst the fraternity as well as businesses. Rahul Bhai is one of the expert who deals in service tax, VAT, and income tax. He is appearing before appellate authorities in all these three direct as well as indirect fields. So we are having today a versatile personality and a knowledgeable person. I request Rahul Bhai to take over from now. Thank you very much. We welcome you, Rahul Bhai.
Thank you very much, Bishan Bhai, for a lovely introduction. But I must say, after introduction of the GST, the diversity in the practice and the skill is almost killed. So it's very difficult to cope up with all the subjects nowadays, but I will be limiting myself to the GST today. And we are going to deal with the two topics today. I have been told to deliver, to share my understanding and my thoughts on the two topics, especially that is one about the taxability of plotted developments, and second, which is a very burning issue in the real estate segment as of today, that is about the taxability of development rights. Right. So at the outset, I must congratulate the CPE committee for organizing such a wonderful webinar series. And I must convey my gratitude to CA Parshottam Bhai Khandewal for inviting me over this dais to share my views and my understanding about the topics. And at the same time, I welcome all friends and the members from the fraternity. And I especially acknowledge the presence of my co-speaker, Mr. Mahadev Bela. He happens to be a very good friend, and he is a very good expert in the RERA regulations and the laws. So friends, we would start with the taxability of plotted developments first. Generally, what happens in case of real estate, we generally hear about the taxability of the apartments and all. So wherever there is a constructed space, construction in form of a residential or a commercial unit, it may be in a flat, or it may be a residential bungalow, or it may be a commercial establishment. So the taxability of those constructions are no more in dispute now. The service tax was first introduced on these kind of transactions in the year 2004 when it related to the commercial or industrial construction service, and residential constructions were brought into the taxability in 2005. And then the disputes cropped up as to whether these two amendments made in the year 2004 and 2005 were meant for the real estate developers or only for the contractors. Thereafter, there were many judgments, including Srinagar 4 Cooperative Housing Society from Ahmedabad Tribunal, which was affirmed by the Honorable Gujarat High Court, and wherein it was held that the construction services are only taxed under the respective categories which were brought in service tax law in the year 2004 and 2005. But the real estate developers who were selling the properties as such, who were selling the residential or commercial units, even though at the time of development and by receiving the consideration from the buyer prior to receipt of the completion certificates, they were not to be taxed under those categories, because there the transactions were in the nature of sale of immobile property, and if there was any element of service, that element was restricting to the self. The service shall be deemed to be the services provided to themselves. So it was a self-service to the developer, and which cannot be taxed. Having realized by the government that there is a good amount of revenue to tap, in the year 2010, they made a specific amendment. They created a fiction by way of an explanation to ZZB and ZZQ of the erstwhile categories, and they brought the real estate developers within the net of service tax, and then the service taxation on real estate developer started. So in 2012, we had a paradigm shift in form of a negative list. Again, the real estate developers were continued to be taxed by virtue of a fiction which was created in section 66E clause B. Then in 2017, when we migrated to GST regime, the same provision was incorporated in para 5 of schedule 2 of the CGST as GST Act. So this was all about the constructed space, and there was no dispute, there was no doubt. It was made very clear that the GST or the service tax were applicable. Now the question arises as to development of a plot. When a developer or a landowner divides a piece of land into small pockets, small plots, and then that plot is being sold to the prospective buyer, there may be two scenarios. One, where he is selling the plot after completion of the development. Second, where he is selling the plot during the course of development. So in both the scenarios, the question of taxability arises under the GST law. And this entire issue started because of one advanced ruling that was delivered the state of Gujarat by the Advanced Ruling Authority in case of Ramesh Nayak. So in case of Ramesh Nayak, it was decided, it was ruled that the developed plot is not a land, and accordingly it is taxable under the GST law. Now, this was the root cause of this entire litigation or entire dispute within the trade and within the administration. Now, with this, in this background, I would start discussing the basic provisions. First of all, we'll have to appreciate what are the basic provisions of the GST law, which may influence the taxability of the transaction. So, for the sake of understanding, let me put a poser before all of you that there is a developer who owns the piece of land. Say 10,000 square yards of a land is being owned by the developing firm. Now, we started developing. It's a horizontal development, no vertical development, no construction is being done, no residential or a commercial unit is being constructed over that piece of land. Only the horizontal developments are being undertaken, and thereafter individual plots will be sold by the developer. Say 1,000 square yards of a plot will be sold out by the developer to the prospective buyer. Now we'll analyze the taxability of these kind of transactions. So, but before going to that, we'll have to understand the basic provisions of the GST law. I'll go back to the July 2017 and we'll start afresh that what are the basic provisions of the GST law. Because still today, I have been given to understand by someone, he happens to be a very good friend of mine from the department. When we had a discussion about the taxability of certain issues, I'll deal with that issue at a bit later stage. Then I said, sir, the GST law is of 6 years old now. After 6 years of enactment, we are talking about the basics of the GST. So we have disputes about the basics. Then he told me that how do you measure the age of a GST law? I said it was enacted in the year 2017. We are standing in 2023. So it's 6 years. It's so simple arithmetic. Well, no, sir. The age of the GST law is to be measured from the date when we started understanding that law. So we have just started understanding the GST law. We have just started the audits, investigations, and inquiries on the law points, not on the fake invoices and all. But on the law points, we have just started understanding, evaluating the provisions of the law. So the GST law is not 6 years old, it's hardly 6 to 12 months or max to max 18 months old, not more than that. So we are still in the basics, and in next 45 minutes, I'll definitely prove, I'll definitely convince you people that we have a lot of doubts and disputes over the basics of the GST law. Anyways, now let us come to the section 9, subsection 1 of the CGST or SGST Act, which levies the tax. So section 9, subsection 1 levies a tax on the intrastate or interstate supply of goods or services or both. So the subject matter of taxation, as we all know, is a supply, and that is defined in section 7.1. So section 7.1 defines the supply on an inclusive basis so as to include all the forms of sale, barter, transfer, lease, license, etc. of goods or services or both in the furtherance of a business and for consideration. Right. Now, the important question arises here is, what is the scope of the definition of a service? Because there could be a sale, there could be a transfer, there could be an exchange, barter, but that has to be in relation to the goods or services, right? Now, in the question which is before us today for discussion, there is a land which is being sold. So the question, prima facie question or basic question arises as to whether the land is goods or services. If we answer this, and then only we can go further for the determination of taxability. Now, goods is defined as any movable property. So there is no doubt, and there is no iota of a doubt that the goods can be analyzed so as to include the land within its scope. So no question. But interestingly, the definition of a service which is given in section 2102 is anything other than goods. And this definition is borrowed from the definition given in the Constitution also, which means anything other than goods. So now question arises as to whether we mean to say that anything other under the sky other than goods is included in the definition of a service. If that be so, then the land has to be considered as part of the definition of service. With your permission, I'll slightly digress. There was a very, very recent controversy came to me in one of our case, where the transaction was relating to the transfer of business from one entity to another, which is normally known as demerger or acquisition, takeover, etc. And we all understand that when there is a transfer of a business, there is no taxation. At the most, we'll refer to notification number 2, serial number 2, notification number 12, serial number 2, which examines the services by way of a transfer of a going concern. So all the businesses mostly are a going concern, and transfer of a going concern is an exempt service or an exempt supply by virtue of the notification number 12. But again, the question arises whether the transfer of a business is supply of service. Because we understand the notification 12, which is issued under section 11, comes into play only when there is a taxability, when there is a chargeability under section 9, read with section 7. If the transfer of a business is to be reckoned as a supply of service, because of this theory that anything other than goods is a service, so business is not the goods, so it becomes part of the service. And if that theory is correct, then only transfer of a business can be treated as a supply of service. And then only question of referring to notification number 12, serial number 2 arises. Similarly, here, whether the land is falling within the scope of the service which is defined in section 2, very vitally. In case of a business, I have a different thought. So that is not the context. But I'll definitely say that the business is not part of the service, is definitely not covered by the definition of a service. And I'll give a simple reason in short, without delving further in detail, that we have a fine jurisprudence, that every definition given in this statutory provision is known as a nomen juris. And each definition, each nomen juris, unless there is an interplay between the different definitions given in this statute, are to be treated as mutually exclusive of each other. So goods, definition of goods does not include which is included in the definition of service. Definition of service does not include which is included in the definition of goods. And similarly, in section 2, we have a definition of business as well. So three things are defined in section 2: goods, service, and business. So the business or something which is included in the definition of a business or a business as such cannot be deemed to have been included in the definition of either goods or services, because there is no such explicit provision, there is no such fiction created within the definition of service. So even if the definition of service says anything other than goods, it does not include the business. Hence, transfer of business, it's outside the scope of section 7.1. But similar analogy cannot be drawn while we are dealing with the land. The land, first of all, land is nowhere defined in section 2. Land is not defined in CGST Act or an SGST Act or an IGST Act. Hence, there is a reasonable theory which one will have to accept at a reasonable point in time, that the land might be included in the definition of a service. The only courts will decide at the appropriate time as to whether the definition of a service will include land or not. But as of today, the prima facie interpretation of law suggests that the land is included in the definition of a service. So if there is a transfer of a land, if there is a sale of a land, it amounts to a supply of service as per section 7.1. Though my heart does not believe this theory, but my brain is compelling me to go by this theory. So let us go with this flow that section 7 is applicable to a transaction wherein there is a transfer of land or a sale of land. And that is why Schedule 3, Para 5 has incorporated an entry whereby sale of land is treated neither as supply of goods nor supply of services. If the 7.1 was not applicable to sale of land, then there was no need to incorporate Para 5 in Schedule 3. But because it was included and the government never intended to levy a tax on the transactions of sale of land simpliciter, they incorporated an exclusion by way of entry number 5 of Schedule 3. That is sale of land. So if we go by that theory, sale of land is excluded. Now, we need to analyze and we need to understand as to whether the developed plot is a land or not first. Because in case of a Ramesh Nair, Advanced Ruling Authority raised a doubt, or rather they ruled that a developed plot is different than a land. Absolutely incorrect, absolutely illogical, but they held it. And therefore, we'll have to analyze as to whether the land includes the developed plot or not. But thankfully, the decision of Advanced Ruling Authority in Ramesh Naik that has been set aside by Honorable Gujarat High Court in case of Munjal Bhatt. Number 2, we have a recent circular that has been issued by the board, wherein in Para 14, they have clearly held that developed plot is also a land. And therefore, the sale of a land as prescribed in Para 5 of Schedule 3 can be made applicable to a transaction. Now the controversy arises because the decision of Honorable Gujarat High Court in case of a Munjal Bhatt and the board circular are being misinterpreted by some of the people within the trade as well as the administration. And there is an emergence of a different school of thought which says that if there is a completion of the development, that means if there is a plot which is fully developed, nothing further is to be done, and thereafter that plot is sold to a buyer, then the board circular is applicable, then the decision of Gujarat High Court is applicable, and no GST is payable. It falls under Para 5 of Schedule 3. But if the plot is being sold during the course of a development, in our example, the developer is developing the different pieces of plots of 1,000 square yards. He has started developing, he has started constructing the roads, boundary wall, etc. It's not been completed yet. And during the course of planning with the completion of the development process, he entered into an agreement to sell with one buyer. See, he will sell the plot a fully developed plot to Mr. X. Once the plot is ready, once the entire scheme is developed, and he has entered into an agreement to sale and received a part consideration. So now the question arises whether this particular transaction is covered by the board circular. Because board circular is talking only about the developed plot. But whether the under development plot is to be covered by the board circular or by this language of para 5 of schedule 3 or not, that needs to be analyzed. My thought to this question is that if we see the language of para 5, see, I'll not pay much attention to the advanced ruling or the board circular. Let us stick to the basic provisions of law, statutory provisions. Para 5 of schedule 3 simply says sale of land. So if there is sale of land, it is to be neither treated as supply of goods or supply of services. Now, in case of the transaction on hand, whereby an under development plot is agreed to be sold at a future date and the part consideration is received, whether it amounts to sale of land or not. So now let us compare these provisions with the history which I discussed in the beginning. This is the reason why I refer to the history of service tax for the constructed developments. That prior to 2010, the transactions, though we had the categories of construction services in the statute book in form of ZZB, ZZQ, etc. Despite of that, the courts have taken a view, and despite of that, the government, when incorporated a fiction in the law in the year 2010, that fiction was incorporated prospectively and not retrospectively. So the under construction transactions were brought to taxability, but only for the purpose of residential or commercial constructions, right? So the point which I am able to make here is that in order to bring such kind of underdevelopment transactions into taxability, there has to be a fiction to be created. In absence of a fiction, that transaction is to be considered as a transaction involving sale of immobile property simpliciter and not otherwise. Now, we'll have to see whether the fiction is available in the GST law or not for the developed plots, not for the constructed properties. For the constructed properties, yes, there is a fiction that is in form of para 5B of schedule 2. But whether that fiction is available to the sale of land, answer is no. Patently and very loudly, that answer is no, because if we see carefully the language of para 5, it says sale of land and comma subject to clause B of para 5 of schedule 2 comma sale of building. So there are two situations, two types of transactions which are included in the negative list of para 5 of schedule 3. That is one, sale of land, and second, sale of building. But sale of building is a qualified statement, is a conditional exclusion. Unless the transaction falls under para 5B of schedule 3, sale of building is covered by para 5 of schedule 3. That means, putting in a different way, I would say that sale of a building after completion, because a transaction involving sale of a building after completion does not attract the fiction of para 5B of schedule 2. So such a sale of building is covered by the negative list of schedule 3. But if we see for the purpose of sale of land, then such kind of qualifying words or the expression is missing. Para 5 dot sale of land, comma, and subject to para 5B of schedule 2, comma, sale of building. That means a fiction is attached to sale of building wala transaction, but not to the sale of land. Sale of land is absolute, unconditional, and unqualified expression. So whether or not the transaction is entered into by the developer with the buyer during the course of a development or post-development, all such transactions will be covered by the expression sale of land, incorporated in the negative list, provided that there has to be a land, number one. Number two, there has to be sale. The sale has to happen from the person who is transferring this. I am referring to this because there could be a model wherein the developer is not the landowner. So if the developer is a landowner, as I explained, para 5 is squarely applicable and that sale of land is not taxable. You can, in support, we have now different advanced ruling also from Goa, very recent advanced ruling of Rabia Khanun, Goa Shantilal. But when the question is coming for a different kind of transaction wherein the developer is not a landowner. If the developer is not a landowner, then the theory which I have explained so far will not be applicable. Because as I said, sale of land is sine qua non. There has to be a sale. If there is no sale, then para 5 is not applicable. That we will discuss at a later stage while we will be discussing with the development rights. But if there is no sale, there is no para 5. If there is no para 5, then 7.1 will not come out of our box. And then the taxability would arise. So if the developer is not a landowner is a different person who enters into a development rights, who transfers the development rights to the developer, and then after developer is developing the piece of land and he's developing different plots, and then he's conveying that particular plot to the buyer. Then in the hands of a developer, in my opinion, there is no sale. Because sale is defined in section 54 of the Transfer of Property Act as something whereby the ownership in the immovable or immovable property is transferred. So ownership is a necessary concomitant while we are referring to the sale. If the ownership is not transferred, then there is no sale of immovable property. Because sale is not defined in section 2 of the GST law. Therefore, we'll have to refer to section 54 of the Transfer of Property Act only. Correct. We have another principle of law that no person can transfer a better title than what he has. So in the given example, if we are evaluating the taxability in hands of a developer, then the developer is not holding the ownership rights. What he has is the right to develop. And the right to develop and ownership are two different kind of rights. Ownership is a bundle of all the rights which a particular person may have. Development right is just one of it. So developer cannot transfer the ownership to a buyer. Hence, there is no sale of land. So if there is a tripartite arrangement like which we have explained, landowner, developer, and a buyer of a plot, in that case, the consideration which is going to flow to the developer will be taxable. Whereas the consideration which will, or a price which will flow to the landowner for sale of particular piece of land or a plot, that will still remain outside the net of GST, but a consideration which would flow to the developer would be definitely taxable. Now, having explained the taxability, now I'll try to give a basic idea about the rates. Because I have come across various situations where in the market, the people would start paying GST on these transactions, because after ruling of the Ramesh Nayak, there were various doubts, and even the people are creating doubts over the board circular also, which according to me is absolutely clear that the circular is enough to explain the theory which I have just explained to you. Developed as well as underdeveloped, both the plots are covered by the circular as well as by the para 5 of schedule 3, and accordingly is not taxable. But in case someone has to pay the tax, someone wants to pay the tax in order to buy peace of mind, then what could be the rate of tax? If we consider a transaction as a taxable transaction for any reasons, then what could be the tax rate? I have seen there are a few players who pay the GST at the rate of 5%. After April 2019, we have a rate of 5% applicable to the residential constructions. The serial number 3, para 1, Roman 1, 1A, B, C, D, E, F. So 5% is being discharged with respect to the sale of a developed plot or under development plot. According to me, that is patently incorrect. Because if we see these entries of 1 A, B, C, D, those entries are meant only and only for the construction services with respect to an apartment. Now, apartment and plot are two different things. We have a faculty on the RERA law, Mahadev Bhai, he would also appreciate that. But if we see the RERA provisions, even the preamble of the RERA Act, it is referring to plot and apartment separately. That means the definition of an apartment does not include a plot. And in serial number 3 of notification number 11 of 2017, Roman 1 ABCD, what the government has referred to is only and only construction of an apartment and not otherwise. So construction of a plot, for a moment we assume that it is a taxable supply, then it does not fall under the serial number 11ABCD. Hence, rate of 5% is not available, is not applicable at all. If it is to be paid, if the tax is to be discharged, it has to be at the rate of 18% only. Yes, of course, we can refer to the para 2 of notification number 11, and a deduction of 1/3 can be taken because the land value is included. So that deduction can be taken. So effectively, the rate would become 12%, but not the 5%. Moreover, there are different models, but I think we'll have to deal with the another topic as well. So I'll quickly and shortly deal with the other models wherein the transaction value or the plot price is divided into two different parts. One is the sale of land, one is the land price, and second is the development charges. So if the transaction is divided, if the developer is entering into an agreement for sale of land and a price is specifically mentioned for sale of land, and over and above that the development charges are being separately collected, in that case sale of land would be exempt, would be outside the GST net by virtue of the theory which I explained about the para 5 of schedule 3, whereas development charges, if it is to be proved that the development process was a separate and independent process than the contract for sale of land, then the development charges would be taxable, and again at the rate of 18%, subject to availability of ITC. I have also discussed about the model wherein the land developer is not a landowner. So if there are tripartite arrangement, then the taxability is certainly there and it cannot be avoided at all. So with this, I'll conclude my first topic about the sale of taxability of the developed plots or under development plots. And now we will quickly move to the another topic that is about the taxability of development rights. Again, taxability of a development right is again a very, very complex subject of real estate GST. Because in the service tax era, we used to believe we had a very, very fine decision from the tribunal, which is still pending before Honorable Supreme Court. That was in case of a Vasantha Greens. And there, the issue was slightly dealt with as to whether the joint development agreements can be taxed or not. So the primary question is, whether the development rights, transfer of a development rights are taxable or not. Let me give you an example. There is a landowner who is not interested in developing any scheme. He simply transfers his development rights to a builder who is having the expertise in the construction, the development of the real estate projects. And the developer will have all the rights to construct, to design, construct, develop, and then sell the properties, sell the residential or a commercial unit to the buyers. So the question is whether the transfer of a development right by the landowner to the developer is taxable or not. We are not talking about the taxability of a transaction in hands of a developer because it is absolutely clear, there is no doubt about it. But whether the development rights transferred by the landowner to the developer is taxable or not. Initially in GST law, especially prior to 2019, there was a school of thought which strongly believed that transfer of a development right is not a taxable transaction at all under the GST law. Because in case of a DLF, Honorable Chandigarh Tribunal decided that development right is an immobile property, because we had a definition of immobile property under the General Clauses Act Section 3, I believe subsection 6, which was defined to include any benefits arising from the land. So the definition and the concept was being compared with the concept of profit a prendre. And it was held by the tribunal in DLF case that the development right is definitely an immobile property. In service tax era, the definition of a service was given in section 65B 44, which excluded mere transfer of title in immobile property. So there we had two things. One, transfer of a title. Second, immobile property. Like here in GST, as we discussed, in para 5, we have sale and land. But in service tax regime, we had two concepts, that is transfer of title, not the sale, transfer of title, and second is the immobile property. We must appreciate that the word immobile property is much wider than the land. General Clauses Act defined immobile property to include all the rights arising from the immobile property, and therefore the development right was considered as an immobile property. Now, transfer of a title is again very, very wide as a concept than the sale. If we are referring to title, there could be variety of titles. A title to develop, a title of lease, a title to occupy, a title of easement, a title of ownership. There could be variety of titles. Hence, any kind of a title which is being transferred in immobile property was excluded from the definition of a service. Hence, in service tax era, transfer of a development rights were not taxed and is now beyond any doubt. But coming to GST regime, as we discussed in para 5 schedule 3, they have referred only to sale of land. Sale of immobile property is not used anywhere in the GST law. What they have excluded is sale of land, and subject to para 5B of schedule 2, a sale of building. So only these two things are excluded from the scope of a supply, and not all other transactions relating to an immobile property. So first of all, concept of immobile property is gone in GST. What we need to see is whether there is a land or not. And if there is a land, we'll have to see whether there is a sale or not. Right. So in order to see whether there is a land, whether the development rights are constituting a land or not, there is one thought that we may borrow the concept of an immobile property, like general clauses define the immobile property as inclusive of all the rights arising from the immobile property. Similarly, Land Acquisition Act defines in section 3 land as inclusive of any rights arising from the land. So that is the definition. The definition is very much comparable and similar to the immobile property. So let us assume for a moment that there is development rights in the land are to be considered as land as such. But now question arises as to whether it amounts to sale. Because in order to satisfy para 5, we have to see there has to be a sale of land, not just a transfer of development rights. Sale is a more specific word. As per section 54, as I discussed, there has to be transfer of ownership only. If there is no transfer of ownership, there is no sale. Yes, so transfer of a development right may result into a transfer of one title, but it is certainly not the transfer of entire bundle of all the titles. And therefore, transfer of development rights, in my considerable opinion, is not akin to sale. And therefore, para 5 may not be applicable to the transfer of development rights, but it is again subject to divergent views, and the court may decide at the appropriate time. But if we see the intent of the government, it is made very clear now, especially after amendments made in April 2019. It has been made very clear that transfer of a development right, or for that sake TDR, that is transferable development rights, or the FSI, all these are the taxable transactions, all these are the taxable supplies and not covered by para 5 of schedule 3. So accepting what the government is intending, that transfer of a development right is a taxable transaction, then it opens the Pandora's box, because there are different models in the trade, in the industry, and having different treatments. To summarize all these models and the treatments, I would say, if the transactions of transfer of development rights or the agreements are entered into after 1st April 2019, because in April 2019 there was a paradigm shift in the real estate segment for the GST purposes. So if the agreement is executed on or after 1st of April 2019, then the transfer of development rights for residential purposes is exempt. Notification number 12, entry number 41A is exempting the transfer of development rights, but it is a conditional exemption. Very unique way of drafting of the notification. If you see the entry is so complex and uniquely crafted, I would say. It is the conditional exemption because it says that the amount of the exemption shall be limited to the extent that development rights are pertaining to the units sold before the receipt of the BU permission or the completion certificate or the OC or the first occupation. In nutshell, the transfer of development rights for a residential apartments would be exempt if the developer is paying or discharging the GST on sale of residential units, or to the extent it discharges the GST on sale of residential units. Because in hands of a developer, if the unit is sold after the receipt of OC, BU permission, completion certificate, or first occupation, by whatever name you call, then the tax is not leviable. But if that's so, then the exemption which was initially granted by notification number 12 will be withdrawn to that extent, and the developer will have to pay tax. Again, the value of the development rights is to be divided into two parts: pre-BU and post-BU, or pre-OC and post-OC, and the rate of 18% is to be applied over that. However, there is a cap, and the cap is about the 5% or the 1%, as the case may be, on the value of unsold unit or unbooked units. So, taking an example, if the total value of a development right is say 100 crores, and the 60% units were booked prior to receipt of the OC, then the 40 crore rupees becomes the taxable value of development rights. To that extent, the exemption will be withdrawn. On 40 crores, the 18% is the rate which is applicable. Against that, if the value of the units is say unsold units is say 70 crores, then on 70 crores, assuming that they are non-affordable units, on that 70 crores, the rate of 5% is to be applied. So it comes to 3.5 crores. So 3.5 crores or 18% of the 40 crores, whichever is lower, is to be discharged by the developer. So in this case, the developer will have to pay tax of 3.5 crore. So in nutshell, if there is a development right involved in the scheme, builder or a developer will end up paying the GST on entire scheme and the bifurcation of pre-OC and post-OC would be just for the academic reasons. Effectively and for all practical purposes, the entire scheme will attract the GST, and that was the very purpose behind the incorporation of these entries in the notification number 11. Now, there are many other, as I said before, that there are different models. This was the model, very, very simple model, a transaction simpliciter. But there could be a scenario where the landowner is transferring the development rights for not just the cash, but for the constructed space. Means landowner is transferring the development rights to the builder, to the developer. In lieu of the development rights, the developer is going to pay certain amount in cash. Let's say 10 crore rupees in cash and 10,000 square feet of area. So this is the hybrid version, and the landowner is going to get the consideration in form of cash plus kind. And we'll have to evaluate the taxability of this. Friends, we know that in GST, a concept of a supply includes even barter. In Vasanta Greens, this concept was rejected. But in GST, the barter has become part of the statutory concept. So here, that the single transaction are having two different legs. One, transfer of development rights by landowner to a developer. Second, provision of a construction service to the extent of 10,000 square feet of area, constructed space or constructed area. There is a provision of a construction services by the developer to the landowner. And both the legs of this transaction will be taxable. In Vasanta Greens, there was a argument that at the end, the builder would sell the units in the open market, and the amount which he is going to receive from the buyers, at the end, that amount is being used construct the free space which is to be provided to the landowner. So once the entire amount which is being received by the developer from the open buyers is subjected to taxation, there is no point in subjecting these internal transaction again for the purpose of taxation. It is creating a cascading effect. But that has been completely rejected by the government in this notifications and the statutory scheme. Both the legs of transactions would be taxable. Supply of development rights by the landowner to the developer, and provision of a construction service by the developer to the landowner. However, after April 2019, it is only the developer who will have to pay GST. If we are talking about the tax on the transfer of a development rights, the tax will have to be paid by the developer under reverse charge mechanism. The landowner is made free of this taxation burden. So it is only and only the developer who will have to pay tax. But the condition is that development rights are transferred to a person who happens to be a promoter. If the development rights are transferred to any other person who is not using those rights for the purpose of developments, like in case of a TDR, transferable development rights certificates or FSI, there may be a scenario wherein the person is allotted the TDR certificates by the municipality, and then he is selling these TDR certificates to Mr. X in the open market, and Mr. X does not have any plan to utilize those certificates at that point of transfer. He may utilize at a future date, or he may further transfer it to somebody else. So if that be the scenario, in that case, Mr. X does not become a promoter. Sorry, Mr. X does not become a promoter. And if the recipient of the TDR or the rights or the certificate is not a promoter, then it is the supplier who will have to pay tax under forward charge mechanism, because the amendment made in notification number 13 from April 2019 is applicable only when the recipient is a promoter. Correct. Second, these RCM will be limited to the extent the supply is made after 1st April 2019. So if the development right was transferred prior to that date, and the consideration was also paid prior to that date, then the tax will have to be discharged by the supplier under forward charge, but not by the developer under reverse charge. But if the transaction is entered into prior to 1st April 2019, if the agreement is executed before April 2019, but the consideration flows to the developer after that date, consideration flows to the landowner after that date, then also it is the developer who will have to pay the GST under reverse charge mechanism. So in nutshell, the GST after April 2019 on the transfer of development rights will have to be paid by the developer. Similar is the situation for the joint development arrangements. as well as redevelopment arrangements wherein the society is engaging the developer for construction of the apartments, and the developer would allot the space to the existing members, and some of the units will be sold in the open market. The treatment will remain the same. It is just a difference in a model, but the treatment would remain same. The developer will have to pay the tax on both the parts, one which is being sold to the open buyers, and second, the free space allotted to the existing members. Similar arrangement, similar treatment is applicable even in case of the slum rehabilitation projects, SRA projects, wherein the SRA awards the land to the developer for the purpose of construction of the affordable units, and so either the TDR certificates will be issued, or a right in the particular piece of land would be given to the developer for the purpose of construction of the open units, and those units will be sold by the developer in the open market. So treatment would remain same in case of SRA, joint development arrangements, or the redevelopment arrangement. Just one small point I would like to make it here, and then I'll conclude my session. If the SRA transfers the development rights to the developer, if the SRA transfers the development rights to the developer, by this general theory, we understand that it is not a taxable, the upfront exemption is available to the extent those rights are used for the residential construction. But if those rights are used for the commercial constructions, then there is no exemption. Tax will have to be paid by the developer. However, I have seen in some of the cases that SRA is a local authority for the purpose of and for the limited of that particular area which is getting redeveloped. So if the SRA is a local authority for that purpose or for the limited purpose, then we may explore the applicability of notification number 14. Notification number 14 of 2017 is again a fiction which has been created by the law, whereby all the supplies, all the services provided by the government and a local authority to any person, but in respect of the functions entrusted to them under Article 243 W and G, are treated neither as supply of goods nor supply of services. Now, if we see the function of an SRA, slum rehabilitation, it is definitely and certainly covered by serial number 10 of the Schedule 12. Schedule 12 is the list of functions entrusted to the municipalities and the local authorities under Article 243W of the Constitution of India. And it is dealing with the improvisation of the slum. So functions of SRA are definitely covered by Article 243W. Hence, the transfer of development rights by the SRA to the developer, which is amounting to a supply of services, will be certainly covered by the notification number 14. And therefore, irrespective and notwithstanding whatever contained in notification number 12, I'm repeating myself, notwithstanding anything contained in notification number 12, this entire transaction may be treated as neither supply of goods nor supply of services, and no taxation would be attracted, even though the units are sold after the BU permission. So, with this note, I would like to conclude my session, and I'll hand over the dais to Kishan Bhai.
Thank you very much, Rahul Bhai. And we note here the esteemed presence of the chairperson of the CP committee, under whose leadership all this knowledge transformation is taking place. None other than our Central Council member from Ahmedabad, CA Purushottam Khandelwal sir. Sir, before handing over to you, there is one question in the chat box. Rahul Bhai, someone has asked whether how we can bifurcate sale price of land and cost of development as builders sold plots inclusive of all at single rate. So if you can answer quickly.
So first of all, in my understanding and my opinion, as I explained in detail, if there is a single price, single arrangement whereby the builder is transferring the land or selling the land to the prospective buyer, in that case, there is no taxability. So there is no question of splitting the price and subjecting one portion of it for the purpose of taxation. But if for the peace of mind, of course, for the peace of mind, if the developer is willing to pay the GST on that, then according to me, the best method is to bifurcate the price in the agreement to sell itself as well as sale deed. And the amount which is been attributed to the sale of land shall be supported by either the Jantri rate, that is Rackner rate, or the rate which has been adopted by the local authorities for the purpose of stamp duty, else proper valuation may be made from the market, and accordingly the bifurcation can be given. But that bifurcation has to be incorporated in ATS as well as SINT.
Rahulji, correct me if I'm wrong.
Thank you very much.
I think there is no judgment
thank
of the
you very-
Honorable Gujarat High
yes.
Court in that matter.
Yes, Munjal Bhatt, he has
That
discussed
Munjal
and
Bhatt
accordingly. Yes.
The decision of
So,
Honorable
sir,
Gujarat High
thank
Court
you very much
Munjal
for.
Bhatt.
Yes, sir. Thank you very much for your deliberation and sharing your experience and thought. Yes, I request now Shikha Agrawal ma'am to take it forward. Thank you.
Thank you, Vishanji. Rahul bhai, you want to say something?
No, I just wanted to say, if we really wanted to discuss what is mentioned in the Munjal Bhatt and what was decided by Honorable Gujarat, I think we'll have to take another session of 2 hours for that, just on that decision.
Thank you so much, Rahulji, for your such a wonderful deliberations. Now we have CA Vishanji Kanirwal with us. He is such a dynamic personality. It's my all pleasure to introduce him to this forum. He's having multiple designations with the ICAI, Chairman of CP Committee of ICAI, Vice Chairman of Committee for Members Entrepreneurship and Public Service, Convener of RBI Directorate of ICAI. He is having 25 years of post-qualification experience in the field of audit, direct taxation, indirect taxation, and intellectual property rights. This year, he is devoted himself to fortifying CPA framework and guaranteeing quality across its entire operational spectrum. And this year, major focus would be on upgrading of CP portal for enhancement of the branding and professional competency of members. So now, I'm handing over you to the dais to say something on to the participants.
Good afternoon, respected learned faculty Rahul Patel ji, Mahadev Birla ji, immediate past chairman of Ahmedabad branch, under leadership the Ahmedabad branch awarded the best branch of ICAI, moderator Shikha Agrawal ji, secretary of this committee Ajit Naji Tiwari, architect of these programs which organized every Wednesday, since hand over the charge of the CP committee. So it is immense pleasure to be amongst you. This year, my committee is dedicated to implement a technology in the CP committee, and we are bringing with an online portal where all POU program organizing unit can reach at the same place. The portal is in the progress, and this year we have decided to complete your CP1 in the same calendar year rather than the rolling period of 3 years. So now there is no rolling period of 3 years. You have to complete CP in this 1 year period. A lot many programs is organized by CP, not only in the portal, but we have organized various conferences at the various locations. Before 4 days, I was with the Finance Minister of India, Nirmala Sitharamanji, at Bhubaneswar, where the CP national conference was organized by this committee. So they are also very happy. That is the work by ICAI. And this year, ICAI is celebrating the 75th year of inception. And we are working with Government of India, soldiers to soldiers. We have did a lot of programs for the capacity building program in GST committee across India. So ICAI is doing a lot of work. This year, I will request to all viewers that those who are not registered in the GLOPAC, which is a very, very important conference, will be held in Mahatma Mandir, Gandhinagar on the 24th, 25th, and 26th of this November. Because the last year we did the same program at the World Congress in Reliance Jio Mumbai. That was the great success, attended more 10,000 members, 8,000 in physical and 2,000 in the virtual. So those who are not registered, please register. I'm also bringing to your knowledge that there is total 19,001 zip code in India. Out of 19,100 zip code, 17,000 zip code where the student has cleared the CA examination. So now the presence of chartered accountant is not in the mega city and big city, but across the country. So we are in the partner of nation building. I will not much take our time because the Mahadev Birla is an expert in the RERA, and that the Rahul Bhai and Madhya, those who are in the interconnected, they are looking the GST for the real estate project, and Madhya Birla is an expert in the RERA, and this is an, even though continuously column writer in the Taxman newsletter, is very renowned person in Ahmedabad. So I will not take much of a time. I hand over charge to the Shikaji for the further. Thank you so much.
Thank you so much, sir. And now I request I'll introduce our next speaker, CA Mahadev Birlaji. He is a chartered accountant and having degree of bachelor's in commerce. He has experience of 13 years in the field of financial management, taxation management, internal audit, project audit, construction, EPC services and manufacturing. His area of expertise in RERA, Consumer Protection Act, Right to Protection Act, Income Tax and GST. Overall, we can say he is a multi-talented chartered accountant. Over to Mahadev Birlaji for your deliberation on the significant case flows on the RERA. Over to you.
Thank you, Shikaji, for nice introduction. And I would like to add one more thing that recently I have completed the law graduation also. So I'm a law graduate as well. And thank you, Purushottam sir, for giving the opportunity. You are supporting me not when I was into the practice, but when I was in the industry itself. So since 2012, I have a blessing of God and Purushottam ji also. So thank you, Purushottam sir. Thank you, Bishan bhai. You are also there, one of the person who always supported, giving the opportunity to give the lecture before our members and sharing our views in the RERA at different forum. Thank you, Rahulji. It is great to share. Today I am on the moon. Moon is going to, so I am sharing the dais with the Rahulji, great personality. We had a long discussion and I listened to Rahulji at various forum also, as well as a CREDAI also. So thank you, Rahulji. Now I would not, spend much more time into that. And we will move directly into some important litigations or some important case studies on the RERA point. So I will share my screen. So first and most important case study which I am going to discuss here is the judgment of the Honorable Bombay High Court. And on this topic, I have written one article which is published in the Taxman also. In short, I say that this judgments decide, or we can say that how the promoter is liable due to veracity of the advertisement. So we have given the title of this judgment as an advertisement effect under the RERA, that how the promoter, when he gives an advertisement and do not fulfill the promises as per the advertisement given. So the advertisement may be by way of brochure, by way of in a newspaper, hoardings, anything, right? And due to non-fulfillment of the promises as per the advertisement, what will be the effect to the promoter and what will be the right of the allottee, that we are going to discuss. This litigation or this case started with the RERA authority, Maharashtra Real Estate Regulatory Authority, and the real estate developer promoter challenged this order of the Appellate Tribunal before the Honorable Bombay High Court. But ultimately, the decision was in favor of the allottees, or we can say the customer. So the citation of this judgment is the Bombay Dyeing and Manufacturing Company Limited versus Ashok Narang and others, second appeal 4996 of 2020. This judgment we are going to discuss in a 4-part. What is the issue before the different forum? What is the RERA law says? And what is the ratio decenti in this case? And what RERA and High Court says. So first and most important thing before is that we are going to issue number 1 is the obligation of the promoter for veracity of the advertisement or the prospectus. So whether this responsibility or the obligation of the promoter is prospectively or retrospectively or retroactively. This was held in this judgment. I will discuss this provision or the definition, or we will analyze this prospective, what is the prospective, retrospective, retroactive later on. But in short, we can say, because we all are aware that a lot of the projects in India has still not completed, that started before the RERA came into the picture, and various agreement to sale were executed before the RERA, and in some cases the promoter could not fulfill their promises. So whether that all terms and condition, or whether that agreement executed before the RERA came into the picture, whether that will be applicable after the implication of the RERA, that we are going to discuss in this judgment. Second issue before the Honorable High Court and the Maharashtra RERA Appellate Tribunal was there. What is the right of the allotee? Whether allotee are entitled for the refund along with the interest and compensation, because the promoter said he is going to give something X, but he could not. So whether allotee can withdraw from the project, whether allotee can get a refund along with the interest and compensation. This was the second major issue in this case. Now, before going to, going into the case, fact of the case, we will understand what is the section 12 says. We'll analyze that section. Then after we will read the section 18, and then we will understand that also. So section 12 of the RERA says obligation of the promoter regarding veracity of the advertisement or prospectus. So where any person makes an advance or deposit on the basis of information contained in the notice, advertisement or prospectus, or on the basis of any model apartment, plot or building as the case may be, and sustain any loss or damage by reason of any incorrect statement, including therein, he shall may be compensated by the promoter in the manner as provided under the Act. Provided that if the person affected by such incorrect false statement contained in the notice, advertisement or prospectus, or the model apartment, plot or the building as the case may be, intend to withdraw from the proposed project, he shall be returned his entire investment along with the interest at such rate as may be prescribed under the, and the compensation in the manner provided. So what this definition says, suppose I have seen one advertisement. This is my own interpretation. There may be different view on that part. Suppose today I have decided to buy one flat, and that promoter says, suppose my office is in X area, satellite area of Ahmedabad, in my near to my office or near to school of my children. Suppose the one project is coming and the promoter says that project is 500 meters away from the school. So suppose X person say, okay, this project will have a distance of 500 meter only, so I can drop my children to the school by way of walking only. I will not require any vehicle, right? This is the given in the advertisement. Now, suppose when he buy the project, he start residing there, or when later on he came to know that the project is not, the distance of the project between school and project is not 500 meters, it is more than that, and he has to buy any two-wheeler or four-wheeler, that whether this is a loss or not. So according to me, it is a loss to the customer, because the decision to buy the flat was on the basis of the advertisement given for the project. So when we advise any promoter, we always advise them that whenever the promises, whenever the things you are mentioning into the advertisement, the brochure, please see whether that information are correct. Have you taken any confirmation or conclusion that this promises you are going to fulfill, or some like hospitals, schools are which is the distance which is mentioned in the prospectus are correct or not. So explanation of this provision say the provision clearly said that if any person who buy any apartment plot in the project on the basis of reliance of the information given in the advertisement or prospectus, and later on if it is found that such information was not correct and allotee has suffered the loss due to such incorrect or false information, it is the duty of promoter to compensate such losses. However, if the customer want to cancel that booking, then he can cancel that booking, and it is the duty of the promoter to refund that amount along with the interest and compensation. So this is the section 12 says, which is say that veracity of the advertisement. So jo advertisement hai, that should be correct, and the promoter has to fulfill his promises. We are observing the many litigations are arising because the promoter, once the RERA was not there, they used to give the advertisement, and they used to print a brochure with the various promises. But later on, when RERA came into the picture, they realized that we have to be very cautious when we are publishing an advertisement. And at the time of RERA registration application, we have observed that many promoters had changed their brochure. They have changed their specification when they apply for the registration under the RERA. So the question comes, there may be whether the brochure which is issued or published before the RERA, whether the promoter is liable to complete his promises as per that brochure or not. So I can say that yes, promoter is liable, and that is this judgment says. Now we'll go and read the section 18(1) of the RERA, return of the amount and compensation. If the promoter fails to complete or is unable to give the possession of an apartment building in accordance with the terms of agreement for sale, as the case may be duly completed by the date specified therein, or due to discontinuation of the business as a developer on account of suspension or revocation of the registration under the Act, he shall be liable on demand to the allotee in case the allotee wishes to withdraw from the project, without prejudice to any other remedies available, to return the amount received by him in respect of that apartment, plot, building, as the case may be. So what this section 18 says, so promoter has given a promises, whether by way of advertisement, whether by way of agreement to sale, that project will be completed on so and so date and the possession will be given on so and so date. But the promoter failed to give the possession on so and so date, whether customer can get a refund? Answer is yes. If customer or allotee do not wish to withdraw from the project, then promoter is liable to pay the compensation or interest for a delay possession. Now the issue comes whether the date of possession will be as per the date specified in the RERA registration certificate, or whether the date of possession will be as per agreement to sale. So as per provision of the section 18 and various judgments of the Honorable High Court and the Supreme Court, the date of possession would be as per agreement to sale, and the date of possession would not be as per the date specified in RERA registration certificate for completion of the project. So in this section 18, there are two situations where promoter is liable to pay the interest to the allotee due to failure to give the possession of apartment. So first situation says, when promoter failed to give the possession of flat as per terms and condition of the agreement, including the date of possession given in agreement for sale. Second situation is that when promoter failed to give the possession due to discontinuance of business after the revocation and suspension of the registration granted under the RERA. In this provision, one important aspect is that a return of the amount along with the interest will not debar the allotee to seek the compensation. So the allotee can seek the compensation from the delay from the promoter for the delay or failure to give the possession also. So the interest and compensation both are the separate things. For a compensation, the application has to be filed before the adjudicating officer, and for the interest and refund, the complaint has to be filed before the regulatory authority. Now we are going to discuss this case of the Bombay Dyeing. So what is the case? So the promoter name is the Bombay Dyeing and Manufacturing Company Limited. The project name is Iceland City Center. Project location is the Vadala, Mumbai. Promoter issued the brochure, advertisement and prospectus. In that brochure, what promises were made? That this project will have a luxurious facility, world-class infrastructure, 8 acres of lush green landscape, and the possession will be given in 2017. This was the promises made in the brochure. Booking of the apartment. So there are some customers who booked the apartment in 2012-13. So 2012-13 means before the RERA. So RERA is applicable from 1st April 2017, though it is came in 1st May 2016, and it is applicable from 1st May 2017. This booking was confirmed by way of the allotment letter. There are a total 11 complaints. The project for the apartment could not be completed in the 2017. Apart from that, what promoter did? The promoter changed the layout of the flats, layout and outdoor facility. The promoter even made changes in the amenities and also. When the project was registered before the RERA authority, Maharashtra Real Estate Regulatory Authority, the promoter has declared that this project will be completed by 31st August 2018. Later on, again, the extension application was filed and the revised date was 31st August 2019. So this was the fact of this and the ground of the complaint before the RERA authority. What relief sought by the complainant? They said that this promoter has changed the layout plan, they have reduced the amenities, and because they could not fulfill their promises to complete the project within by 2017, so they wish to withdraw from the project, and they requested the promoter by way of complaint, they sought a relief that they should be given a refund along with the interest and compensation. So what RERA authority has given the order? RERA authority has given the order in favor of the promoter, where the order was given that obligation of the promoter regarding veracity of the advertisement of brochure does not apply retrospectively, because the brochure was issued in 2012-13 and RERA came into picture from 1st May 2017. So the veracity of the advertisement is not applicable retrospectively. Provision of the RERA do not apply to the present transaction as which took place in the year 2012-13, that is much prior to the enactment of the RERA. RERA has given the advice to the allotee that it is better to execute the agreement to sell, because in that case the booking was confirmed by the only allotment letter. There was no agreement to sell. So what RERA authority has advised the allottees that it is better to execute the agreement to sell, and if allottee intend to withdraw from the project, then such would be guided by the terms and condition of the allotment letter. So if there is a terms and condition, the allotment letter, that there would be some cancellation charges that has to be bear by the allottee. While deciding this matter, what RERA authority has observed? The observation of the RERA authority was that promoter can give the possession of the flat as per the timeline declared, that is August 2019. That is the revised timeline, because section 4 subsection 2 LC of the RERA said that promoter has to give a declaration that at what time the project would be completed. And another observation was made by the RERA authority that if they will give or they will pass the order in favor of the allottee, then all the allotee will come and file the complaint, and that will have a financial burden on the promoter. So what they exactly observe, cancellation of the allotment and withdrawal of the money by the allotee will adversely affect the project, as the project is in advanced stage and there are 520 allottees in the project. So by giving that order, what RERA authority says, suppose एक को withdraw दे दिया और refund दे दिया, तो everybody will come and that will have a financial burden of the promoter. Now, all the customers against whom the order was passed by the RERA authority approached the RERA appellate tribunal, and they filed the appeal before the RERA appellate tribunal on the ground that RERA authority has considered only one point, that is the obligation of the promoter to compensate the allotee and refund the amount due to incorrect or false information. Second, the failure on the promoter to give the possession as promised was not considered, because what promise was made by the promoter that the possession would be given in the 2017. This issue was not discussed by the RERA authority. RERA authority has not considered the view taken in the Nilkamal Realtor Subunds Private Limited and Another versus Union of India, Order 2017 SSC 93202. The Honorable Bombay High Court held in that judgment that the provision of Section 18 of the RERA, that is provision related to refund of amount on account of failure of the promoter to give the possession time to allotee, is retroactively applicable. So RERA authority has what they have taken a view that this is not applicable retrospectively, while in the Nilkamal Realtor judgment, Bombay High Court held that this provision is applicable retroactively. What is the concept of the retroactively or retrospectively? We all know about the Vodafone judgment, Vodafone related income tax issue, where the government has changed some provision of the Income Tax Act retrospectively. So that was applicable since the beginning. So this is the, in a general way, application of meaning of the retrospective. What is the retroactive? So retroactive meaning is, there are two meanings. The first, which may be called true retroactivity, consists in the application of the new rule of law to an act or transaction which was completed before the rule was promulgated. So in this case, the RERA came into picture from 1st May 2017. However, the transaction was before the RERA. The second concept of the retroactivity is, which will be referred to as a quasi-retroactivity, occur when a new rule of law is applied to an act or a transaction in the process of completion. The foundation of this concept is the distinction between the completed and pending transaction. So this is the rule of the retroactively. मतलब जो काम हमने पहले, that things which have already started before, but the new role came into the picture later on. So in the case of Nilkamal Realtor, it was held that the provision of Section 18 is retroactively applicable. So what RERA appellate tribunal has given the order, whether Section 12 of the RERA applies prospectively or retrospectively or retroactively. So it was held that it is applicable retroactively. Whether promoter committed breach of Section 12 and Section 18 of the RERA, it was held yes. Whether allottees are entitled for the refund along with the interest and compensation from the promoter, it was held that allottees are entitled for the refund and interest only, no compensation. Now, the conclusion of the RERA appellate tribunal's order is that Section 3 of RERA, that is registration of project, is applicable for ongoing project. If Section 3 is applicable for ongoing project, means all other provision are also applicable. RERA provision enable the promoter to decide the timeline to complete the project, but possession of the flat is to be given as per agreement to sale only. Extension of timeline to the complete the project is avoid the penal consequences, not to delay the possession as per agreement to sale. Provision of RERA do not rewrite the clause of the agreement to sale, means whatever the clause is written in the agreement to sale, which is executed between the allotee and the promoter. So the RERA provision cannot rewrite that clauses. Means when the promoter has promised to give the possession as per a particular date, it is the duty of the promoter to give the possession on particular date. Interest payable as per section 18 of the RERA is not a penalty, as it is a compensatory in nature. Due delay in possession, allottee is deprived of the use of fund paid by him, so the promoter is liable to pay the interest for utilization of the fund. Means if the promoter would have not taken the money, he would have borrowed from the market. So ultimately he is utilizing the money of the customer, then it is the duty of the promoter to give the refund with the interest. The liability of the promoter to compensate and refund of the amount along with the interest due to incorrect false information in the brochure and delayed or failure to give the possession as per agreement for sale are not retrospective in nature, and the same are compensatory in nature. Therefore, it is retroactively applicable. Now, this was the judgment of the Honorable RERA Appellate Tribunal, which was given in the favor of the allottee. Agreed with this order, the promoter approached the Honorable Bombay High Court. What was the ground? First ground was that the part occupancy certificate in respect of the building relevant flats of the allottee was received before the date of completion, that is 31st August 2019. So what promoter says, because the part occupancy certificate was received in respect of the particular block in which the complainant has booked the flat, therefore there is a no breach. Mean what they want to say, because 31st August 2019 the project was, or that particular building was completed, so they fulfilled their promise. This was their ground. RERA authority decided the complaint on the basis of the maintainability only. So what they say is the first order which was passed by the RERA authority was only on the basis of maintainability, and there was no merit. There was no argument on the merit. Third ground was that complaint should have been decided by the adjudicating officer. So what they said, that the jurisdiction of that complaint lies with the adjudicating officer. Section 12(18) of the RERA Act says is that it is not applicable to the representation made and agreement entered. So what they say, because this agreement was executed before the RERA came into the picture, so there was the provision of section 12 and 18 is not applicable to that agreement. The complaint on the basis of such pre-existing cause of action would be determined in accordance with the pre-existing contractual and statutory right of the parties and not as per the provision of the said act. So this was the reason for filing appeal before the Honorable Bombay High Court. What Honorable Bombay High Court held, that it is held that validity of section which was challenged before in the case of Neel Kamal Realtor, it is not required to reconsider that, and they upheld that judgment, and it is said that there are no required to revisit, and the provision of section 18 is applicable retrospectively. What another decision was taken, that section 12 cannot be read in isolation and has to be read with section 18 of the Act of 2016, as section 12 and section 18 of the Act 2016 provide for an option to the allottee to withdraw from the project. So section 12 says, when there is a due to veracity of the advertisement, if a customer want to withdraw from the project, they can withdraw and they will be entitled to get a refund along with the interest. Even in case of the section 18 also, if the promoter failed to give the possession as per agreement to sell, the customer can withdraw from the project and they will be entitled to refund along with the interest. So what Honorable Bombay High Court says, that both the section cannot be read in isolation, that has to be read together, because both gives the right to customer to get a refund along with the interest and compensation as per the rules. What another decision was, that section 12 talks about the loss occurred due to veracity of the advertisement, while section 18 talked about the failure to give the possession as per agreement to sell. And therefore, even though the section 12 was not under challenge in the Neel Kamal Realtor, but there is no reason to treat section 12 differently. Section 18 have been held to be retroactive or quasi-retroactive in nature, and therefore no different consideration can arise even in respect of the section 12 of the RERA. So this was the judgment of the Honorable Bombay High Court, which upheld the judgment of the Honorable RERA Appellate Tribunal, and the decision was in favor of the allotee, where the refund was granted, and on the basis of the veracity of the advertisement. So this was a very, very important judgment, because the various litigations are arising because of the agreement to sale which was executed before the RERA. Apart from that, what we are observing as a practicing in the RERA since last 5 years, there are no litigation as far as no major litigation we can say. And in future course of action, we may see that there will be a lot of litigation in respect of the section 12 of the RERA, because it is not only that you wish to withdraw from the project, even you continue with the project, if there is a loss occurred due to veracity of the advertisement of the project, even you can file an application before the adjudicating officer seeking a compensation, but you have to just justify that what loss occurred due to that veracity of the advertisement of the project, that we can see in future. Now, before going to the another judgment, because we are all are chartered accountant, I would like to discuss one important judgment of the Rajasthan High Court, Honorable Rajasthan High Court, in the matter of Sanjay Gia, who is also our senior member into the profession. So what is the issue in that? We all are aware that chartered accountant can represent before the RERA authority and the appellate tribunal. So in this matter, what happened that the Mr. Sanjay Gia, who is a chartered accountant, he appeared before the Rajasthan Appellate Tribunal, Rajasthan RERA Appellate Tribunal, and his submission was not considered, and it was stated that being a chartered accountant, you cannot represent on the behalf of the respondent, because what section 56 says, that I will go through that section 56. So the issue was in this matter whether, as per provision of the section 56 of the RERA, can CS, ICW represent the matter before the appellate tribunal on behalf of the respondent. So this is the provision regarding the section 56, right to legal representation. So what is the provision? On the left side, it is written, the applicant or the appellant may, so it is word is written applicant or appellant, may either appear in person or authorize one or more chartered accountant or company secretary or cost accountant or legal practitioner or any of its officer to present his or its case before the appellate tribunal or the regulatory authority or the adjudicating officer, as the case may be. So first line says the applicant or the appellant. So it is not written respondent. So if the customer has filed the complaint or filed the appeal before the filed the complaint before the RERA authority or filed the appeal before the appellate tribunal, so whether a chartered accountant or a company secretary or ICW can represent the promoter on behalf of the respondent. So the matter went before the Honorable Rajasthan High Court, and they amended the provision of section 56, where the word respondent is added after the appellant. So what is the outcome of this decision is that the applicant or the appellant or respondent may either appear in person or authorize one or more chartered accountant or company secretary or cost accountant or legal practitioner or any of its officer. So ultimately, they have amended the provision, they've changed the provision, and the word respondent is added. So that clarifies that chartered accountant can represent on behalf of the respondent also. Now I would like to again this advertisement, which we being a chartered accountant, where we are into the practice of the RERA, we majorly focus on the registration part, we majorly focus on the compliance part. But when we are dealing with all the RERA matters, when we are representing our client, we should always give the advice to the promoter that how their advertisement should be and how they should be cautious in respect of the advertisement. So one issue I have discussed, which was related to Maharashtra RERA and Honorable Bombay High Court. Now the another issue is that again related to the advertisement. This issue is related to the Gujarat RERA, where the matter reached till the Honorable Gujarat High Court, and the issue was discussed in this matter related to the section 11, which talks about that any advertisement or prospectus, the word is written or, whether the section 11 says that the advertisement or prospectus should contain the details of the project like RERA registration number and the website of the RERA authority. So if the project is in the Gujarat, then Gujarat RERA website name and along with the RERA registration number. If the project in Maharashtra, then Maharashtra RERA website name and along with the RERA registration number, so that any customer who wish to or he want to know the details of about the project, they can visit the particular website of the RERA authority, and through the RERA registration number they can do the inquiry and they can do the detailed analysis of the project. So that's why the section 11 of the RERA says. Now the issue was that the promoter published, they issued some brochures. However, in the brochure, they only mention the RERA registration number. Because what section 11.2 says, so in this matter, the issue is that website address of the RERA authority is to be mentioned on advertisement and prospectus both or anyone. So before that, we'll read section 3. What section 3 says? Section 3 says, no promoter shall advertise, market, book, sale or offer for sale, or invite person to purchase in any manner any unit in any real estate project or part of it without registering the real estate project. So unless and until my project is registered with the RERA authority, I cannot do any advertisement, I cannot take any booking, I cannot take any money from the promoter. So my RERA registration is compulsory. What section 11 subsection 2 says, any advertisement or prospectus issued or published. So here the wording is advertisement or prospectus issued or published by the promoter shall mention prominently the website address of the authority, wherein all details of the registered project have been entered, and include the registration number obtained from the authority and such other matter incidental there. So this section 11 subsection 2 says that the promoter has to mention the website name, website address, and the RERA registration number. On what? Prospectus issued, advertisement or prospectus issued or published. What the promoter did? Advertisement was published in the newspaper Gujarat Samachar Vadodara edition. Project name was Narayan Greenwood and Narayan Angan. The advertisement did not contain the web page of the Gujarat RERA authority, that is the gujrera.gujarat.gov.in. So what that project had? They had only registration number. RERA authority, Gujarat RERA authority took a suo motu action and they imposed the penalty of rupees 1,25,000 rupees for each project, because here the promoter mentioned that only RERA registration number on the advertisement which is published in the newspaper, because they mentioned the number in the and website address in the brochure but did not mention in the newspaper advertisement, because section 11.2 says any advertisement or prospectus. Now, agreed with this order, the promoter approached and they filed the appeal before the appellate tribunal. Appellate tribunal reduced the penalty from rupees 1,25,000 to 75,000. Agreed with this order, again, because promoter was not agree with this order, they were not satisfied. So they approached the Honorable High Court. And the Honorable High Court given the judgment in the favor of the promoter. However, that order was recalled. what judgment was given by the Honorable Gujarat High Court, that High Court remanded back the matter on the basis of interpretation of Section 11(2) of the RERA. Gujarat High Court has given the view, without going into the fact of the case, that it would be sufficient compliance with the provision if the website as contemplated there is mentioned either in the advertisement or prospectus. So there is no requirement of it mentioning in both. So this was the interpretation of the Honorable Gujarat High Court. It is mentioned that there is no breach of the provision of Section 11(2) of the RERA, as it clearly mentioned that advertisement or prospectus issued or published by the promoter shall mention prominently the website address of the authority. In the provision, word "or" is used, that is advertisement or prospectus, not advertisement and prospectus. So this was the first judgment of the Honorable Gujarat High Court. This judgment, this order of the Honorable High Court was recalled by order dated 26/12/2019. Then there was a question of the law. What question of the law was before the? Whether the Gujarat Real Estate Regulatory Authority erred in imposing a fine of rupees 1,25,000, and whether the Gujarat Real Estate Appellate Tribunal further erred in only reducing the fine to rupees 75,000, while holding and declaring that the appellant had no ulterior motive in failing to mention the name of the website of the Gujarat RERA Authority. Reduction in penalty was made with the finding that no mens rea was involved behind the contravention of Section 11(2) of the Act. So what appellate tribunal had, that there is no, intentional. There is no intention of the promoter to violate the provision. So they reduced the penalty to 75,000 rupees. However, what Honorable Gujarat High Court held, that mens rea not being criteria of the penalty under Section 16 of the Act, it was warranted on the mere proof of breach of the provision. So provision of Section 60 is not on the basis of the mens rea. It is that when there is a breach of provision, there is a violation of the provision. If sufficient proof is there, then penalty can be imposed, and the appeal dismissed as there was no involvement of the question of the law. So when the Honorable Gujarat High Court recalled the order, they decided the question of law, whether in the second appeal, because once we file appeal under Section 58 of the RERA, the appeal before the Honorable High Court can be filed on the basis of the question of law. So what Honorable Gujarat High Court had, that there is no question of law, so appeal is dismissed. So this was the judgment related to advertisement. Now some important judgments of the Honorable Gujarat RERA Authority in the case of execution. We all are aware that Section 40 talks about the execution of the RERA Authority order. When the RERA Authority is passed or passed any order, and if it is not complied by the promoter or the allotee, what are the provision under section? What are the provision under the RERA? So provision under Section 40 is there regarding the execution. So Gujarat RERA Authority has come up with some rules, and they have some procedure under which that when the this order of the RERA Authority or the adjudicating officer is not complied, then the customer can file a execution application by payment of rupees 500. Why I am discussing only the Gujarat RERA provision? Because provision everywhere is there, right? But some important judgments are there. What first and most important judgment is that in the matter of Ashish Tekwani versus Rameshwar Developers and others. In this matter, this project was not registered. The promoter is the Rameshwar Developers. In this case, the project was not registered before the RERA Authority, and the complaint was filed. The order was passed by the RERA Authority directing the promoter that the unit which is booked by the allotee will not be sale, and there will not be a sale of entire project without the permission of the 2/3 allotee. Because due to some financial issues, the promoter could not develop the project in entirety. However, the promoter filed undertaking with before the RERA Authority, stating that they are collecting some information and they will approach the RERA authority for the registration of the project. This the undertaking was filed by the promoter. Even though after giving the undertaking, the promoter, what they did, they sold the entire land of the project to the third person. So when the execution application was filed before the RERA authority, it is came to know that the order of the RERA authority was violated. It was not complied. So what RERA authority has given the order? They have given the order of civil imprisonment of 15 days to the promoter, partner of the Rameshwar developers. And the one of the partner who represented himself before the RERA authority in the execution matter and was in a custody of the RERA. He was detained in the RERA office for 2 days. Then after, the Honorable High Court has given the stay on that. This is the actual picture of the Gujarat RERA authority, where there is a separate one room is made for the civil prison. So this was the first order when again this stay was granted by the Honorable Gujarat High Court. The second incident again, or second case we can say, again one of the promoter, this case where the promoter failed to do two things. One, he could not install the submersible pump in the project, and he could not install the lift into the project. So one of the customer who filed the complaint before the RERA authority, wherein the RERA authority has given the direction to install the submersible pump and lift. However, the promoter failed to install the lift and submersible pump. The execution application was filed before the RERA authority, where the order was passed. Again, 15 days civil prison order was given. In this case, again, this matter was represented to us. Second matter, first was also represented by us before the Honorable High Court. So this again order was stayed by the Honorable Gujarat High Court with some condition, where some amount was deposited before the Honorable High Court, and again the matter was stayed. Third, again the case of the Gujarat RERA, where one of the promoter, the order was issued for a 30-day civil prison. So I was there from the customer side. In this case, again, there was an order of the RERA authority where the direction was given that promoter will execute the conveyance deed, sale deed in favor of the allotee, and if there is some remaining amount payable from the customer side, allotee side, that would be paid. The allotee paid the amount, then allotee filed the separate application before the adjudicating officer for seeking a compensation. During that pendency, that flat was sold by the promoter to the third person, and the entire amount was refunded to the customer. So in the execution application, that fact was disclosed, and they came to know that the promoter has violated the order of the RERA authority, and again 30 days civil prison. So order, there was a 15 days civil prison order. In this case, 30 days civil prison order was given, and it is against the MD and 3 other officers of the company who filed the affidavit before the RERA authority. So on the basis of that false affidavit, the RERA authority has given the order for civil prison of 30 days to the MD and 3 other officers of the company. That was the private limited company. In that case, again, the matter went before the Honorable Gujarat High Court. The stay was granted by payment of some additional amount. That matter is still pending. I think we are just near to close. So with this judgment, another judgment is there of the Honorable Maharashtra Appellate Tribunal. I will conclude in a very few seconds or minutes. This is the matter related to Ratul Lahiri versus Tata Housing Development. The issue was that Which documents will decide the date of possession? Booking form, allotment letter, agreement to sell, or project completion date. So it is even in booking form it is mentioned possession date. Even in the allotment letter it is mentioned possession date, and agreement to sell is not executed. That booking form and allotment letter will decide the possession date. So I will not discuss this judgment in detail. There are various other judgments also. Nilkamal Realtor, Pioneer Urban, Chitra Sharma and Union of India, Bikram Chatterjee. These judgments are very important. If you read these all the judgments, all the provision of the RERA will give the clear picture. This is the book I have written on the Gujarat RERA. Thank you.
Thank you, Mahavir. There are some questions. Question from section 2. How is retrospective is different from retroactive?
So the retrospective, I'll give I have given the judgment of the Vodafone matter, where the central government of India, I think they have amended the provision of the Income Tax Act, not central government of India. By notification, they have changed the provision of the Income Tax Act. When the provision related to some capital gain, I am not aware much, that was made applicable retrospectively. Means the date on which the act came into the picture. Now, this is the meaning of the retrospective, meaning it is applicable since the beginning. What retroactively it is applicable, the new law is applicable for the transaction. So, act is applicable from the 1st May 2017. But the transaction which has happened before that act came into, on that transaction also it is applicable. That is the meaning of the retroactive.
And what are the benefits for the parking? Is there any benefit under the RERA for parking allotment? And nowadays builder doesn't write the parking number and the parking.
There is a definition of the common area. If we read the common area, right, in that definition it is given clearly that open parking comes under the common area. So the promoter cannot sell the open parking. They can sell the cover parking, which is as per the approved plan. So this thing we can always keep into the mind. Now we all aware, and this is not the right platform to online discuss, that we know how the mode of payment is there in the real estate industry. So anyway, being a customer, whenever we go, we have an emotional attachment. So we generally pay that buy mode also, and we buy the parking also. But only the request is that we can advise our client to have a necessary documentation for that. But if we read the definition of the common area, we'll come to know that the open parking falls under the definition of the common area, which belongs to the society, which is the part of undivided share between all the members of the project or society.
Thank you so much, Mahavir, for the detailed discussion of the case laws, which definitely would help our RERA professionals to safeguard interest of their clients, be it their lottie or the promoter.
Thank you.
So, round of applause to you. And as we all know, this evening is a very historic evening for the India. So now let's watch smooth landing of our Chandrayaan-3 on the moon. And a big salute and applause to our scientists. So we'll conclude this session. Thank you so much.
Thank you.